Welcome back, everybody, to the Money Mindset channel. Again, it is week 2 of my dividend investing portfolio. As you can see, we're going to be actually investing $600 today in stocks that pay a dividend. First, I want to go over what I own already and just kind of give you a little brief summary of the companies and just kind of give you a small little breakdown. So as you can see, the portfolio is at $1,900.27. And on the day, we're up so far. The stock market actually closes at around 4:30, or is it 4 o'clock? I forgot which one, but 4 or 4:30. So it still has more time to grow. On the day, we're up 0.45%, which is $8.80. On the week, we're up $14.50, 0.76%. On the month, $27.66. So I'm going to go over here on the right side right here. This is where I have all of my stocks that I currently own. So at first, we're going to go over Ford. And it tells you kind of everything. I kind of actually like it on the desktop. It's a nice format. The format was black before because the market was closed, and that's something I like about Robinhood as well. When the markets are closed, it turns black, and then when they open, it turns white. It's actually kind of nice. So here's Ford. Everybody, if you don't know, Ford, it says right here in the About. Let's click Read More. Ford Motor Company engages in manufacture, distribution, and sale of automobiles. So Ford trucks, the F-150s, F-250s, that series, everybody pretty much knows about. So this is definitely a company that's not going out anytime soon. And like I said before in my previous video, they pay a 7.84 dividend yield. And I currently own 30 shares of this company right here. As you can see, 30. And it takes up about 14% of my portfolio. Next one we're moving on to is Pfizer. I talked about this one before. This is kind of discounted, so I'm going to be buying some actually later on today. And at the end of the video, that's when I'm going to be purchasing all the new stocks that I'm going to want to put into my portfolio. So the equity is $550. So my average cost is $36.57. The shares, I have 15 of them. And that takes up a larger amount of my portfolio, which is 28%. And so Pfizer is pretty much, like I said before, engages in discovery, development, and manufacture healthcare products, specializes in medicines, vaccine, consumer healthcare. So, the health sector is actually a pretty big market, and this one pays 3.16 dividend. Next one I have is PEGI. So PEGI is actually a solar company. And I thought I'd just dabble in here real quick. Actually, because solar I think is on the rise, and this seems like a really good company to have in your portfolio. It's something I'm just kind of testing out, but as you can see, I only have 5 shares of it, so definitely a small position, which takes up 7% of my portfolio. Why I actually like this one is because you can see that dividend right there. 9%. Beautiful dividend. So for every $100 I invest, I get $9 on the year. So that's great. So my 5, that puts out about $9.07 because I own about 136. So it's actually a little more, probably like $12 and some change. So that I get each year. Prospect Capital. So my equity in it is $59.27. So right here, it's a business development company which engages in lending to and investing in private businesses. So business development, this is a whole nother sector. The last 2 I showed you were like automobile and health sector and like energy sector. This one's a whole new different one, which is business development. And so they currently do not have a dividend yield, which is actually kind of odd because I honestly thought they had one before. So I'm not sure if this company cut their dividend, but But there are companies that do that. That it's definitely, you look at the yield, but it's definitely not always guaranteed. But honestly, for the bigger companies like Apple, Ford, Pfizer, they, for the most part, they keep their dividend, and honestly, they've been growing their dividend over the last 30 years or however long they've been paying out a dividend. But this was pretty interesting to actually know, so I'll keep that in mind. Next one I own is Coca Cola. I'm actually a big fan of Coca Cola, not only because Warren Buffett owns it, but honestly, you can see the money around you every single day. Like, every day I'm out driving, I see a Coca Cola truck. Every time I drive on a highway where I live, I actually see like a whole Coca Cola like factory and just tons and tons of trucks. So like, it's always cool when I see a Coca Cola truck and they're delivering Coca Cola to businesses like that, because I feel like I am an owner. So whatever they're delivering and whatever is bought, I get a piece of that. So I only own 3 shares right now. It's only 8% of my portfolio. I want to actually definitely increase that over time, but currently I have $163 in it, 3 shares. And like I said before, like Ford, everybody knows Coca-Cola. Like, it's worldwide. But Coca-Cola mainly drinks, as you can see right here, Coca-Cola, Diet Coke, Fanta, Sprite, Minute Maid, Powerade, you name it, they probably honestly own it. So Fuzi Tea, stuff like that. So they have bought a ton of brands. Cube, honestly, I bought this because my girlfriend, she actually had a Cube storage, and so I just checked the price, and I saw that it was around $33 that I bought it at, and it pays a nice dividend yield too, 4.25%. So I was like, you know what? If my girlfriend's going to be giving money to this company, I might as well own a piece of it. And so, I like to say, oh, well, you kind of paying me over the summertime, which is actually pretty funny. And she didn't like that at all. And this company actually is self-managed and self-administrated real estate investment trust. So CubeSmart is a storage facility. They only have just like one person on site usually, or 2 people, and it's just people storing their stuff right there. So we live in the inner city, so it's like everybody doesn't have a lot of room, so they would have to buy these storage units to put all the extra stuff in it that can't fit inside their house, which is actually a very, very lucrative business. And honestly, you can't get rid of space. Like, everybody needs space, which is nice. So real estate sector, this one. And then Iron Mountain, I only have about 2 shares, $68, which is only 3%. I think this is my smallest portfolio position. So, like it says right here, storage of information management solutions. It operates through the following the business segments. Just data management and just storing data for companies. And I actually see a couple of trucks like this around too that drive around. So, the money is definitely there. The yield on this was just sweet. I like what it's looking like right here. 7.32. So I only have about $68 into it, but once I get to 100, it would be around $7.32. That's the easy breakdown of the yield. Great. Now you've seen everything that I've owned so far. Now the fun part, we are going to be buying some stocks. So everything I have on my watch list, I'm going to be buying. So it's kind of straightforward. So let's start with AT&T. I don't actually have AT&T. I have Verizon Wireless. But, I used to have AT&T when I wasn't paying for my own phone bill, and it was pretty expensive. But, people just pay for it, And so they actually have really good service, honestly, everywhere. So, and the yield on this fat sucker right here, 7%. So my old position was at 9. So right now we're going to go ahead and buy 10 shares of it. Estimated cost $376.45. So here we go. Placing the order. Buy. AT&T purchased. I got 10 shares now. So that's going to be nice cash flow right there every 3 months because they pay quarterly. AG&C, I had a good position of this. Honestly, I'm going to wait until it drops down just a little bit because I had bought it when it was at like $13, $14. And so when I had offloaded my portfolio from before, I actually got a pretty decent gain. And honestly, I'm going to click on this one and show you guys. This one is a dividend king right here. As you can see, it's 12.31%. So for every $100, you get $12.31. It's crazy. But when you see a high dividend yield like this, don't be too like, oh my God, here, just take all my money, because usually it's risky. That's why they have a high yield, so that people just think, oh, let me just buy it because they have a high yield. But, you got to be aware of that type of stuff. So let's go back down. So Conoco Phillips, I had a position of 2 stocks, so I'm going to go ahead and buy one right now. Few. Conoco Phillips purchase. Perfect. So this one is oil company. Energy sector, pays a 1.86%. And honestly, you can't go wrong with the energy sector. Even though we're probably transitioning towards electricity, and like the energy is going to be like solar and electric cars and stuff like that. For the time being, oil and all the other energy, ExxonMobil, not going out of business anytime soon. So you don't have to worry about that. Hanes brand, they actually pay a nice dividend. So you can see 4.92, which is actually pretty great. I'm gonna go ahead and buy. I think I had like 6 of these. I'm gonna go ahead and buy 6. Yeah, I'm gonna go ahead and buy 6 of these. And perfect. Add it. And Unilever. So consumer goods, toothpaste, personal. It says right here. Dressing, spread, ice cream, and beverages, personal care, home care. They do everything, you know what I'm saying? So like, it's not like toothpaste, you're gonna run out of it, you're gonna have to go buy more. It's stuff like that. So I had bought 2 shares. That's $118.11. Oh, okay. So that big purchase on AT&T was actually what had knocked off a lot of it. And review that order, and we're gonna buy that. So you can see on the right hand side now, my portfolio is getting bigger, and I love to see that, which means when your portfolio is even bigger, more dividends, more capital gains. Hopefully you guys liked the video a lot. Please smash that like button, and please subscribe to the channel. I can't stress that enough. That will help me out so much. Smash the like button and subscribe again, and thank you.